Hello and welcome to Macro Mondays, brought to you by David Gockstein. I am your host, Landy, and today is June 22nd, 2026. And we're looking at Bitcoin on the daily here, and I guess somewhat of a controversial chart. I'm going to explain what this is. This is a compression on the daily, and we're actually going to work our way up through the time frames. And we're going to talk a little bit about what compression to expansion might look like from here for Bitcoin here on the daily as it relates to the volatility levels of interest and the support and resistance areas of interest that we have on the chart. So as it stands right now, Bitcoin is kind of going sideways in a nice daily compression that has been reflected in the bands here. So we are getting volatility contraction for Bitcoin, otherwise known as a consolidation or compression phase for Bitcoin. And this is going to resolve one of two ways, either to the upside or downside. And there are certain conditions that need to be met in order to see the expansion kick off in one way or the other. And it's all going to be relative because we do have a compression here on the daily, but on the 2-day, we haven't yet seen the compression start to kick in. In fact, this is a fairly bearish range that Bitcoin is showing on the 2-day. You can then extrapolate that out to the 3-day as it's in a bit of an expansive look and still heavily pointed to the downside, trending below the lower first. If you move up through a 4-day, you see the same expansion rejecting the lower first to begin with after hitting the lower second off of the initial expansive move to the downside. We started to get volatility expansion to the upside, but kicked it off in earnest more aggressively with the close below the lower second standard deviation on the 4-day. 5-day was the same, right? And then we also have, of course, the weekly, which is set up in a range, but starting to show signs of expansion. The confirmation is going to be right where this daily range is. So this is very important. Now, we're not going to go throw in all of the different levels of interest on the chart just yet, like I typically do. We're going to discuss some of the conditions here, and they're pretty straightforward, right? So if we look at the actual lows, if they are dropped, that would initiate expansion to the downside. Typically, when you have a Bollinger Band set, what you're looking for volatility is you get the, actually, let's change this. What you're looking for is the close below the lower second. Any kind of close on the daily below a lower second standard deviation. And yes, the daily session is still open for another 30 minutes. I'm recording this before close. So we are going to get further compression on the daily. So you're looking for conditions to be met. And in this particular range, we're right around the lower second being this higher low over here at 60,732. If that's lost, or I would say, I would even consider 61.5 lost, as we're probably going to get a pretty deep correction, or this just starts to flatten out. But essentially, if this low is lost, we're looking for is the actual lows to get tested, somewhere around that 58 to 60. And then if we do start to see closes below the low, that is the condition that needs to be met, which in this case would put it below not just the lower second, but the lower third standard deviation of the Bollinger Band set here. That would be expansion to lower levels, somewhere in the mid 50s to begin with, and then low 50s from there, 48 to 50 being the more downside angled look on that. But off of any kind of initial expansion on closes below the current low, around that 58 to 60 level. And I would want to see the actual low dropped to kick off an expansive move. We'd probably be looking down towards those weeklies, mid 50s, 54 to 56, and then potentially down to 52.5, 50, and then that would rope in the $48,000 lower high from the prior cycle. That's also where we saw the high prior to the ETFs launching. We saw a higher low there as well after the ETF launched, the spot ETFs launched in January of 24. So pretty straightforward stuff. And then to the upside, if we do start to see around $67,000 to $68,000, which is an overhead area of interest, if we start to see that break, then we can start looking, 70 to 72, 72, 74, so on and so forth on expansion. So that would put Bitcoin above the upper second and above the high here. And you'd want to see expansion continue above that upper third standard deviation to go and test some of these areas over here. we've got 72 to 74, 74 to 76, so on and so forth over there. Now, that's typically marked out on the charts. I've shown it to you plenty of times in prior videos, so not going to beat the dead horse there. But what we are going to do is look at where there's some confluence on the 2-day, 3-day, 4-day, 5-day, and the weekly. So if we look here, what you'd want to see is you don't want to see below the low closing. That's where we're starting to get into 54 to 56 down here. That would be daily expansion into the 2-day lower second standard deviation. Any further than that, you get continuation of expansion down into that 48 to 50 area that I just talked about. To the upside, again, daily expansion above this high. Still need to get above around the 68 to 70 level. Around this basis band, then you can start looking, 72 to 74, potentially even roping in 74 to 76 up by this upper first, which is in the $75,000 area. This is a bearish setup on the 2-day, so just understand that that is kind of the lay of the land at the moment. When looking at this from the respects of closing above, the lower high now here, be looking more towards that $72,000 area on expansion. Downside looking more towards that mid 50s and potentially down to 50K. And then 4-day looking the same. You got your 52.5, which is a weekly level. Anywhere below the lower second, you're getting expansion down there, not just on the daily, but you would start to see that on the 4-day. You see the basis band right around 72. Again, right around this high right here of the tighter range. And then, of course, you can start looking 74 to 76, which are those two wicks for the 4-day. 5-day, same thing. 53. So, again, you're starting to get to 53.5. So, initial expansion down would put Bitcoin back below the lower second, not just in the daily, but the 5-day, starting to look towards those mid to low 50s as a potential. Back to the upside, you're getting 72 a lot for the basis. Anywhere above there, it starts to get more aggressive, especially if you saw reclaims above 74 to 76 over here. So 74 on the close. This is 75 on the close. This is 74 on the wick from a couple of days prior, before Bitcoin actually started to break out in earnest after the 65K retest to go and test the monthly at 82.5 to 83. But I think you get the picture I'm painting here. We're in this weekly area where the weekly lower second, if that's dropped, looking for a price replace band somewhere around the mid 50s. And then, of course, back above here, we're looking, 70 to 72 being primary ranges. So if I was to take and turn all of this off and note what we just talked about, the daily compression is very important to pay attention to now, because all of these areas are important areas in the monthly and the weeklies, right? So we have the major area overhead that was rejected. That was a big monthly retest at 82.5 with a high on that move coming in at 82.8. We were looking 82.5 to 83. We now have the upper second standard deviation there. We have the upper first right here at 74 to 76. Again, all these numbers are starting to line up, right? If we start to push the highs here, get expansion on that daily above this high here, this rejection on the daily, which is a rejection on the weekly, then we can start looking at 68 to 69 to, I would say, 68 to 70, to be quite honest, which is right around the basis band. That's also a daily area of interest off of the initial bounce and close above that $60,000 level after the bear candle on that daily, which defined the bottom side. We saw a nice bounce there between $70,500, $70,000 to 72.2 on a high. That's the next area to the upside. Again, downside's really simple. Really start breaking below 62.5. We're probably going to test somewhere around the lows, 58 to 60. If that starts to break down, you can see that the next weeklies down here would be the area of interest. 54 to 56 on the top side. And then we've got, 52.5 to 53.5 on the bottom side there before getting down to 48 to 50, which is the prior cycle's bear market lower high from 2022. So pretty straightforward stuff. What you should be watching then is that daily, because the daily is going to give us a lot of information. If we start to trade above this swing high over here, we can look for probably somewhere around, that swing high is at 67,260. Then we can start looking 68 to 70. In lower term timeframes, I would pay attention to like 68.2 to 69.2 or 3 right there on a daily level. Of course, that was the lower high before the higher low trend reversal setup break, and then we marched all the way up. Now, above there, we can start getting, probably more aggressive on an expansion, especially above that 70 to 72 here. Start looking 74 to 76, and then it's right back to 78 to 80. And then potentially maybe even a monthly retest. Never know. Could be in the cards if we start to see that happen, level by level. And to the downside, dailies below 58 would be full on expansion. In fact, below 59, almost 59, 58, 8 here. On some charts, it's going to be more close to 58, so do customize it for your own chart. In this case, that's where we start looking for that expansion down into the mid 50s to begin with, and potentially low 50s opening up to upper 40s. So pretty straightforward stuff for Bitcoin. Not very surprising, as Bitcoin just kind of goes sideways in a range here, right in the middle of this support, essentially between 62.5 and 65. Good stuff. Let's go ahead and take a look at oil. We've been tracking oil for quite some time. We were looking for 75 and under. We got under 75, and now we're trading towards 74. So 74 to 76 was kind of the next big area. To the downside, 68 to 72 starting to open up. We see the lower second starting to get in there. If we do see like aggressive prices to the downside, this could kind of bounce around this area. I would initially look at 68 to 72 in this gap right here. But if we see it start to stabilize at much lower prices, that's good for lowering that CPI number month over month as we start to move in towards the reads next month. But you want to see it sustain there, right? I think that if anything, and I've said this on stages a lot, like what you want to see, a lot of the players in the market want to see it around between 70 and 80. And have it bounce around for a little while, like, kind of basically 78 to 80 on the top side. That you don't want to see this gap getting not just filled, but recovered above around 83 to 84 bucks. That would not really look good. That'd look like we're heading back towards the 88 to 90. But I mean, we can swing it, right? On oil for WTI crude. Check your contracts, by the way. So you will see that depending on the contract close date, you'll get a little bit of a discrepancy. So for when the August contract's going to open up, yeah. So we're seeing the August contract is open, and depending on your platform, just pay attention to whether it's August or September contracts that you're looking at moving forward. Because of the way that TradingView does the rolling contract stuff for CFDs, or if you're using CL1. All right. So, back above, 78, that would put Bitcoin in a position to run this gap, between 82 and 84, essentially. What you don't want to see is closes that recover above 84. Not to say that it wouldn't, it's not to say that it's like immediately going to go up and test, but it's just, you don't want to see any kind of closes that keep pushing on up towards that 88 to 90. If we do start to see things below 60, that 68, this big level, this is the monthly level. We were talking about this all of 2025, essentially. After the initial Q1 to Q2 rundown, remember, we got no closes below this level. We swung it a lot down in the $55 a barrel, but we had that 57.30, that lower first standard deviation. And then we have on the monthly, just above there, or above that 68, we've got No, 71 to 72 for the monthly basis band or 20 simple. Beware of snapbacks out of that area. If you are short oil and you're late. Yeah. You probably want to see, for those of you that are looking at economic data, you want to see this stabilize down here in these areas to start seeing CPI reads come down, and then core, and then stay there for a while and bounce around down here for a while to see that start to bleed through to core metrics if you're looking for some cutting action towards the end of the year. I think it's just not feasible. Maybe they could cut by the end of the year if we see stabilized prices. I would say below 75. Then they probably have some latitude to cut. Other than that, I don't think they do anything. I know a lot of people are putting out fake posts over the weekend. Oh, they're going to raise rates, and they're going to provide liquidity to the markets. They're scared. Like, what the hell? People just engagement farming off of bullshit. All right, so SPY, pay attention. One of the key areas of interest here, obviously, is going to be some zone setups, right? We had the nice gap fill down here. We came up. We now have lower low, lower high structure. So what's the criteria to break this back into higher high structure after a gap fill over here and a gap fill here is, you'd want to see if this doesn't, obviously if we see this breaking down below around 720, we've got 715 over here, this spike low to this high over here. That'd be expansion into that area, likely looking for 710, 705, and then down to the 700s area, 698, 700 to retest these highs, to be quite honest. But invalid, honestly, if we start to see it trading back above 756 for SPY. Not even going to look at NASDAQ or Dow. I would keep an eye on SPY. One of the things that you are seeing if you're looking at Dow is you're seeing a rotation in the markets, right? So Dow's holding up around the highs, much better looking than SPY and NASDAQ. And that's because we're getting a rotation. So just pay attention to the rotation. And if we start to see a bunch leaving cash, then maybe look for this to come down, rotation to end if we continue to see some lower prices. But I honestly think this can continue to melt. And in fact, I've mentioned this a few times. When you start seeing this kind of structure, these structural breaks, and then some higher lows, and then maybe it goes and takes out the high, makes slightly new highs. It's this kind of look. We can get stuff like this, the break. And then, in fact, if you were to look at this area and then you look at around October of 25, right? The lower high, in fact, it's this one. Sorry, it's going to be early October of 25, right? You have the trend break, you got a lower high set in, put in a higher low, higher high, higher low, higher high, and then a bigger correction back down, found some equal footing on closes, and then just kind of compressed, went into a sideways compression before dropping that area and then heading down, on expansion. So got that expansion phase to the downside, and then right back on up. So this is our Q1 to Q2 transition this year. Of course, if you look back over here, we had similar structures before some of the larger corrections, right? And this was the big 21%er in early 25, right? So Q1 to Q2, Q1 to Q2. Just be aware that this does look similar to some of the price action over here, right here, just a bigger structure. And essentially what I'm looking at is if we don't get continuation above about 765, that this, while we could continue to make new highs and chop sideways and up, just be aware of a compression at the highs that almost always leads to a downside expansion. So that is what I'm going to be paying attention to for the next couple of weeks, maybe even a month or two, depending on how long it would take if it does do that. What you want to see is consistent closes above 765, 770, to get that upside expansion. Otherwise, it's just going to get range bound, starts to consolidate, squeeze, and then it starts to dump out in a larger correction. So that's barring that it just doesn't go into a larger correction from here. So you do just need to pay attention to 720 to the downside. Can it swing it and be safe? Sure, but just be aware. If it starts to dump off from there, it can maybe go for that 10%er. What would 10% be from the high? I think I looked at it and it's somewhere around the 680. I keep messing with charts, and then I'm talking to so many people and answering questions and stuff that sometimes I take stuff off of the charts and I redo them just to, this is about a 10%, around 680, which is, right in the thick of the volume over here for this topping structure before the larger correction. So almost a 10%er there. Well, we shall see. That's pretty much all I got for you today. Not too crazy. There's nothing really too crazy going on. I mean, I know everybody's making a big deal about, I guess we'll check on SpaceX, right? There's nothing too crazy going on here. Trending down level by level. I'm just tracking it by some of the swings right here, right into the, we've got, ways to go for IPO pricing at 135, but if it can stick around 150, it can try to turn itself around in lower term time frames here and then kind of see what happens. We don't have a lot of data for it, so it's more just kind of wait and see where things settle down after after a nice little run up and then a correction back. We're coming into the time period when the 15 days for NASDAQ stuff is going on, so it will be available for a lot of retirement accounts and that kind of stuff. So, there's a lot of liquidity waiting on the other side. I think that because of the way that this was very quickly optioned, and then we have a quick listing for eligibility for the NASDAQ 100, we've got a lot of things going on with this that are not normal. They're kind of resetting the stage for how IPOs are done. And then we've got unlocks after Q2 earnings. So, it's just something to pay attention to, right? It's like, how much is the unlock going to be? Are we going to see that bonus hit for the extra 10% unlock over that 20% initial? So, and if so, how much? And then how does price react when it's got a bunch more liquidity that could be layered under it? How do the option spreads start to tighten, that kind of stuff. So this one's a wait and see. I'm excited about the long term for this in terms of the company itself. In terms of price action, it's wait and see and evaluate, as it is just, it's new. You're going to see a lot of people pile in and be like, no, I got to get in now. And it's like, look, if it's going to continue to rip, it will have a larger correction later and we can see where it settles down. But, for many that are on the investing side of things, you're either in from early, you're in from IPO, or you're fighting to get shares here. I would say it would probably be best to wait and see until we start to get unlocks and see how the market reacts, and also see how the market reacts to that extra liquidity that we're going to see kind of coming in to juice it. So we shall see. We haven't seen unlocks yet, so just be aware. All right, that's all I got for you today. Pay very close attention to Bitcoin's resolution of this tighter range, and then we'll kind of revisit that on Wednesday, kind of see what criteria is met for Bitcoin here. It's really all in lower term timeframes. If we're dropping this low right here, we have another higher low, but it's sideways, right? So we've got another higher low right here. At 62,170, below 62.5, pay attention to this guy, to this next higher low, which is right on the close, right around that 60,800. If it's dropped, we're going for the bottom side here, and then it's all about closes below the low. That would end up kicking off expansion. You'd want to see it come right back up and in to prevent expansion to the mid 50s. So 58 to 60, it could save itself, but if it starts to close below there, we're either already hitting or will hit those mid 50s, potentially opening up the low 50s to upper 40s. So, and vice versa to the upside. back towards 68, and this high right here. Look for closes above it, 68, and then we can start looking 70, 72, 72, 74, and maybe more if things got rolling back to the upside, although it's a pretty bearish look on the 2 days. So we shall see. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And like and share this out there. And yeah, I appreciate all of you that tune in, and I will talk to you on Wednesday. Landy out. Take care.